people think the decision to rent or buy a home is a simple one. They hear the same advice everywhere. Buying is always better. Renting is throwing money away. Owning a home is the American dream. But when real money enters the picture, the answer becomes much less emotional and much more interesting. Because the real question is not, should you own a home? The real question is, which decision actually makes your life financially stronger over time? And that changes everything. Picture this. A young professional in the United States gets paid every month, works hard, keeps upgrading their life, and finally starts feeling like they are ready for the next big step. They look at a house, imagine family dinners, a backyard, a quiet street, and the pride of having a place that is truly theirs. Then they see the price tag, and suddenly the dream starts to feel expensive. Not just expensive in the way people usually think, but expensive in a way that keeps growing after the purchase. This is where most people make their first mistake. They compare rent to mortgage and stop there. But that is not the full picture. If you rent, your cost is usually more visible. You pay a fixed amount every month, maybe increase it over time, and that is it. It feels simple. If you buy, the monthly payment is only the beginning, because ownership brings a whole second layer of costs. There is the down payment, there are closing costs, there is property tax, there is homeowner's insurance, there is maintenance, there are repairs, there is interest, there is the cost of tying up a huge amount of your money in one asset. And if you do not see all of that clearly, buying can look cheaper than it really is. Let's slow this down and make it simple. Imagine someone rents a home for $2,000 a month. That sounds like $24,000 a year. Now imagine they buy a home instead, and the mortgage payment is $2,100 a month. At first glance, buying looks only slightly more expensive. But now add property tax, insurance, repairs, and maintenance. Suddenly that $2,100 mortgage might become a real monthly housing cost of $2,700 or more. And that is before we even talk about the down payment. If they put $50,000 or $100,000 into the house up front, that money is no longer sitting in their bank account, earning returns, helping them handle emergencies, or being invested somewhere else. That matters more than most people realize. Because money has a job. And when you put a large amount of money into a house, that money stops doing other jobs. This is called opportunity cost, but you do not need a complicated definition to understand it. It simply means this. Every dollar tied up in one place is a dollar that cannot grow somewhere else. That is one reason the rent versus buy debate is never just about monthly payment. It is also about flexibility. A renter can move faster, adapt faster, and avoid major repair surprises. A homeowner gets stability, control, and the possibility of long-term equity. Both have value, but the value depends on your life. Now, let's talk about why people emotionally prefer buying. Because this is where the psychology becomes powerful. People do not just want a home. They want safety. They want dignity. They want the feeling that nobody can raise their rent and push them out. They want a place where their family can settle. They want to feel like they are building something permanent. That emotional pull is real, and that is why this topic hits so hard. Buying a home feels like progress. Renting can sometimes feel like waiting. That emotional difference is one of the strongest reasons people buy, even when the math is not obviously in their favor. But emotional comfort does not always equal financial efficiency, and that is where smart decision-making begins. Now, let's look at the other side. Renting is often criticized because people say you are paying someone else's mortgage. That line sounds powerful, but it is incomplete. Because when you rent, you are not just paying for a roof. You are also paying for certainty. You are paying for mobility. You are paying to avoid repair shocks. You are paying for the freedom to change jobs, cities, or countries without the burden of selling a house first. For someone early in their career, that freedom can be worth a lot, especially in countries like the USA, Australia, New Zealand, the UK, and parts of Europe, where life, work, and housing markets can shift quickly. A person in their 20s or early 30s might think homeownership is the next logical step. But if their job is unstable, their city is overpriced, or they may move in 2 or 3 years, buying can quietly become a financial trap. Because buying usually works best over a longer time horizon. That matters. A house is not a quick win. It is a long game. If you buy and sell too early, transaction costs can eat a huge part of your gain. That is one of the most overlooked parts of the story. People celebrate the idea of home equity, but they often ignore how much gets lost in the process of entering and exiting ownership.
Now, let's bring in the real math in plain English. Suppose you buy a house for $400,000. You put down $80,000. That $80,000 could have been invested elsewhere. Even if your house rises in value, you still have to account for interest, taxes, insurance, maintenance, and selling costs later. So the house has to outperform all of those hidden costs before it truly becomes the better financial move. That means the house is not automatically making you richer just because it goes up in price. And this is where many people misunderstand equity. Equity is not the same thing as cash in hand. You may own more of the house on paper, but you still cannot easily spend that value without selling, refinancing, or borrowing against it.
So yes, homeownership can build wealth, but only under the right conditions. If you stay long enough, buy responsibly, and avoid overextending yourself, buying can be a strong financial move. But if you buy too early, stretch too far, or buy in an overpriced market, ownership can become a heavy monthly burden disguised as success. This is why the smartest question is not rent or buy. The smarter question is, what is the total cost of each choice over the next 5 to 10 years? That one question changes the entire conversation. Because once you compare the full picture, you stop thinking like a consumer and start thinking like an owner of your own financial future. Let's make the emotional side even more real. Imagine two friends. One buys a house because everyone tells them it is the mature thing to do. The other rents and quietly invests the money they did not use for a down payment. 5 years later, the homeowner has a house, but also repairs, interest payments, insurance costs, and a big chunk of cash locked away. The renter has flexibility, savings, and investments that may have grown over time. Who is ahead? The answer is not fixed. It depends on the market, the interest rate, the size of the down payment, the rent amount, and how long each person stayed in place. That is exactly why this topic deserves careful thinking. There is no universal winner. That is the truth most people do not like hearing. Because people want simple rules. They want one answer that works everywhere. But housing is local. A home in one city can be a brilliant financial choice, while the same decision in another city can quietly drain wealth for years. That is why a person living in a high-rent, high-growth city may see buying as protection. Another person in the same country may find renting much more sensible. Same country, different numbers, completely different outcome. And there is another layer here that people rarely talk about. A home is not just a financial asset. It is also a lifestyle choice. Buying may be better if you want stability, family planning, customization, and long-term roots. Renting may be better if you want flexibility, lower stress, and a cleaner path to saving and investing. That means the best choice is not always the one with the highest theoretical return. Sometimes the best choice is the one that gives you the best life, while still protecting your finances. That is an important distinction, because money is not just about math. It is about the life that math makes possible. So what should a viewer actually learn from this? Here is the simple truth. If you plan to stay in one place for a long time, have stable income, can handle maintenance, and can buy without becoming house poor, ownership may make sense. If your life is still changing, your income is not stable, your savings are thin, or your city is too expensive relative to your income, renting may be the smarter move. Not because renting is better, not because buying is bad, but because each one serves a different stage of life. And this is the part most people miss. Financial maturity is not about proving you can buy. It is about choosing the option that helps you stay strong after the decision. A weak buyer can become trapped by the dream. A smart renter can use time and flexibility to build a stronger future. A smart buyer can use stability to build wealth over decades. The label does not matter. The structure does. Before you decide, look at 5 things. How long you plan to stay, how stable your income is, how much cash you will have left after the down payment, how much maintenance and taxes will cost, and what else your money could do if it were not locked in a house. If the numbers support buying, then buy with confidence. If the numbers support renting, then rent without shame. The mistake is not renting. The mistake is renting without a plan. And the mistake is not buying. The mistake is buying for ego, pressure, or fear. Because at the end of the day, the goal is not to own a house. The goal is to own your financial life. And that starts with seeing the full math clearly. Not the fantasy, not the pressure, not the social script, just the real numbers, the real trade-offs, and the real future you are building. Because once you understand that, the rent versus buy debate stops being confusing. It becomes a decision. And a decision is something you can actually control. That is where financial freedom begins.
Renting and buying are both tools, but only one of them fits your life at the right time. The smartest people do not ask what sounds better. They ask what works best for their numbers, their stage of life, and their long-term peace of mind.